Hi there, it's Mike Wise at Capstone Direct Mortgage, and I've got Danny Chan here today, and we are going to be talking about SB9. That's a Senate Bill 9, and that's in California. And basically what Senate Bill 9 says is, I'm going to read this off of here so that we can make sure that we start off on the right track, is the product of a multi-year effort to develop solutions to address our state's housing crisis. The Senate housing package of bills, Building Opportunities for All, establishes opportunities to make real progressive and positive changes in our communities to strengthen the fabric of our neighborhoods with equity, inclusivity, and affordability. So that's the start of it. Danny, tell me, what are your thoughts?
Thanks for having me again. I really enjoyed our last chat last time, so thanks for having me back. I think there's a lot of confusion that's coming into this bill. A lot of people are looking at it going, yeah, I can split my lot, sell this piece, whatever it be. I think truthfully, in my opinion, it's the state's way of trying to get to their quota of getting more housing, because over the last couple of years, all they've been saying is housing shortage. Yeah. So they're doing everything they can. That's how the ADU started a few years ago. For people that don't know, ADUs is essentially a guest house that you build in the back. To add more housing, and then after that they came through with this. I believe they came through with this in like 2021, I think. Is when it came through. But it can change a lot. You know, there's a lot of what ifs to this. And one of them was I've had these really great entrepreneurs reach out to me, a bunch of young kids that are very smart trying to figure this out, and they brought up one thing which you will essentially have the answer to, but they were trying to go out and buy parts of somebody's lot. So let's say that you had like one of the Caneo Country Homes in Thousand Oaks, so like a 900 square foot house on a 13,000 square foot lot, flat. They wanted to come in and pay for a lot split and buy that part of the lot from somebody to build one of
whether
these.
It's in front and back, on the side, wherever it is.
Flag lot, whatever they were going to
do.
But there was a lot of pitfalls that I saw, which you can answer on that. One I saw was if the person has a mortgage on the property, the bank, you tell me what the answer is. They loaned on that house for that size of house and that size of lot. And that's what they owe. And then also they're going to have two things. A lender title insurance policy, and a homeowner's title insurance policy. And those are based on the lot size and the house.
Absolutely, 100%. So basically, if you were to come in and ask me as the lender, which I don't service loans right now, but if you were to ask me as the lender to split this lot, because you have to get approval from the lender to do this lot split, and so if you come in and ask for that, my collateral has now just been cut in half. So instead of owning we'll make it easy, right? A 10,000 square foot lot, right? You cut it in half, it's only 5,000 square feet now, right? Maybe the house is still on it, but I just lost 5,000 square feet of value in my property as a lender, and that's a significant impact on the collateral that I have. And so a lot of things would change if you even did get an approval from the lender, which you probably won't get an approval from a lender to do this.
Well, obviously in the second portion of that, now that you just said that, you're talking about the value. Not only are you thinking you lost half your lot value, or whatever it be, whatever that number shakes out to. But if someone builds another property behind it, what does the appraiser now think of the value of the house in the front? Because you have someone so close to you now. So it's more than just losing the value of the lot. So do you think that most lenders that are servicing, if you come to them and talk to them about this, do you think they're just going to say, pay off the loan? And
they very well would do that. And they basically say your loan is going to be due and payable if you actually do this. So, which, depending on how much you're getting for that lot split, right, that other piece, maybe you can pay off your loan. I don't know. I don't think that's going to be the case, but I mean, there's a lot of things. What's the difference in this versus just doing an ADU?
An ADU would be you're still on the same lot. is you're still on the same parcel.
Yeah.
So there's no parcel number change. I believe, don't quote me on this because things change all the time, but I believe that you have to tie in a new sewer line for the ADU.
Okay.
And they don't. I don't think they allow you to do a new water line. So there's a lot of pitfalls that come with that, though. Like, so the ADU is definitely going to be the path of least resistance because it's still the same property, still the same parcel, all that stuff. Also, people have to realize too, when you add an ADU, right? You obviously didn't notify the lender. The lender has no idea, but they now own that because they have your mortgage, right? Like, so another thing to think about.
Exactly.
They that added value you threw on there in that structure, it's now the banks as well. So if you did an SB9, you would split the parcel. So there would be an entire new parcel. So you would have to get all new utilities, sewer, water, power. You'd have to have new easements.
So the expenses go up.
Oh yeah, they're gonna go up tremendously, for sure. And the biggest question is, will the city serve you utilities? Because they still have to agree to serve you utilities even if you did the split. So, in my opinion, within the city limits, I think it's gonna be an extremely hard thing to do. In the county, you'll probably have a little bit of easier process, but where I think this is gonna work is in more rural areas. Your areas where there are tons of land, maybe somebody has a house on a 5-acre lot.
Yeah.
And they go, I want to split this up and sell it.
2.5 acres.
Yeah, or whatever. Or 3 whatever.
Right, yeah.
3 1-acre parcels, split them up, sell it. I think that's where it's going to work, but I think within the city limits is going to be really difficult.
Yeah. So one of the things here that they talk about, some of these myths, how is this going to impact, is it going to ruin the look of my neighborhood? And they basically, in this document, they talk about areas in San Diego where there's triplexes and duplexes next to single family homes. So in Linda Vista, Hillcrest, and North Park. And, my daughter owns a house in North Park area, and there is a lot of different stuff in there, and it looks terrible at this point in time. But will it impact the look and the feel of the neighborhoods if they do it in some of these, in like our neighborhood here in Thousand Oaks?
1,000%.
Yeah.
The value of a property is based on what someone's willing to pay for it. And, some people just won't live next to a duplex in a single family home.
Yeah.
So there you go. You've lost a buyer, the value's changed.
Yeah.
So I think it would. I mean, you and I live in very conforming neighborhoods where all of our other homeowners in our neighborhood are single family homes.
Single family homes, yeah.
Mine's all single story on my street. So if you saw a 2-story on my street, you'd be like, what?
Yeah.
Right?
Yeah.
So that in its own will change. But if I had to go outside my house and my neighbor across the street split the lot, because he's got a pretty big lot on the corner too, and I saw his house and then another one with a tiny lot split it, absolutely, the neighborhood has changed.
So that's just the look and feel of the house or the neighborhood per se. But then let's talk about there's going to be more cars, there's going to be more people.
Yep.
So there's going to be cars parked on the street.
Yep.
Who knows what the cars are going to look like?
Yep.
All that stuff, right? That's going to impact.
Well, I mean, they're trying to open up housing for this. So essentially, if you did split and built something smaller and rented it out, the demographic of who you're renting to might be of a different income.
Yeah.
So that could change. Yeah, certainly. What cars parked outside and things like that. The other thing that brought me to this now, we talked about the first pitfalls of doing an SB9, which is unlikely to get done in city limits.
Yeah.
But if you were able to split it, and the city did say we'll serve you utilities, right?
Yeah.
And all this stuff. Here's the biggest thing: the cost, construction. If they have to go to you to get a loan to do this, what's that going to cost them?
Yeah, it's $200,000-$300,000 or more.
Yeah, you're essentially building a brand new home. So I think the bare minimum would be a minimum of at $300 a square foot.
Yeah.
So if you built this SB9 split and you built let's just use even round numbers, 1,000 square foot house.
Yeah, that's $300,000.
Right.
So
that's
only 1,000 square feet.
Yeah, if you went 2,000, it would cost you $600,000 on top of. That's just construction costs. That doesn't include the utility hookups and stuff like that.
Yeah.
That's just building the house.
Yeah.
And then you have you have hardscape landscape, things like that. So, they'd have to go to you to get a construction loan.
Yeah.
And what does that cost, interest-wise? And how long is that for?
So what, I mean, it sounds like in here that there's a maximum of 4 units that they can build on the property for this SB9. I mean, that's...
Oh, so you're talking like, so if someone had one lot and there wasn't even anything on it, they split it, right? Like there was a 10,000 square foot lot, they split it into 5.
Yeah.
There's going to be 2 small houses and then ADUs on each one.
Yeah.
So 4.
Yeah.
I think things are going to get really tight to getting that done. The cost is going to be extreme.
And the neighbors are going to throw a temper tantrum here on these things.
Yeah, I think it's going to be really hard to get that done. I did read somewhere where, like, if you did split it, like the setback requirements shrink.
So instead of 10 feet or
it's 5.
It's 5.
Instead of 5, it's 2 or something like that. Right.
So they're basically going right up next to the edge of the properties.
Yeah. I mean, I think it's going to be already hard enough to get the split done.
Yeah.
And then it's going to be even harder to get the ADU on.
Yeah.
I think, personally.
Okay, so one of the things, let's move on to a kind of next piece of this, is basically it's trying to help affordable housing options. Do you really think that this is going to bring more affordable housing to this area?
I think it's going to bring more housing. Affordable, I don't believe so. And the reason I say that is because if you had to build 2,000 square feet on a slot split,
right, it goes back
it'll cost
to
you
the cost.
$600,000.
Right.
And then by the time you're done buying the lot, doing all this stuff, maybe you're in it for like 1.3.
Yeah.
Well, you can't rent it for $2,000 a month.
No.
So you're gonna try to maximize the rent. And the reason why I don't think it's gonna be affordable is because I've already seen people with ADUs and what they're charging for them.
Yeah.
I did see one off of Hillcrest. It was a studio. It was like a 400 square foot ADU, and they were getting $2,000 a month. And I was looking at ones where they were detached ADUs that were bigger, and they started at $2,500 a month, all the way up to $3,500 a month. Yeah. So I don't think it's going to be affordable.
Yeah. So let's do the numbers real quick, right? So let's keep it simple. $3,000 a month, right? That's $36,000 a year.
Yep.
Right? And so that's going to be for like a 600 square foot place. Right? And so that's going to take you 8 to 10 years to like recoup your costs for that, right?
Yeah. I think you're better off buying another investment property, just a standalone investment, like a single family house.
Rather than building it.
Yeah, because you can finance the whole thing.
Yep.
You don't have to build anything, and you can immediately put a tenant in there right away.
Yeah.
I don't think it is. Gosh, Wildwood, which is one of the great neighborhoods out here.
Yeah. With large lots.
Yeah, I've seen 2 garage conversion ADUs, so 400 square feet, 2-car garage conversion, and they were getting $2,200 a month. So yeah, if you do this, you'll open up more housing, but it's certainly not going to be cheaper.
So the affordability is not like, it says it's a myth here that the affordability is not going to go, it's going to be more affordable for people to rent these places, but I don't know that that's going to be the case. I think we still have a housing issue because there's not a lot of people that can afford this, one, and even if they did do it, there's still just a housing issue that is not.
Yeah, just imagine maybe someone starting out, right? Like you get a studio apartment or something like that, or a 1-bedroom apartment, which it could equal a studio ADU or 1-bedroom ADU. Sometimes them and their significant other will live in there.
Yeah.
So, is it really affordable?
Yeah.
And then the impact of, like you said, the biggest thing is parking, stuff like that. So now you have 2 extra cars on the street because you have 2 people living in a 1-bedroom ADU. It'll certainly change the landscape of your neighborhood.
Let me ask you this question. Do you think that there's a lot of institutional buyers out there? So like banks, pension funds, other REITs that are out there. They're buying up a lot of investment properties right now. Do you think that this is something that they might get into, where they just come up and gobble up as many properties as they can and convert them into 4-unit properties?
Yeah, certain institutional investors I think would do that. The JP Morgan Chase in February saying they were going to spend $1 billion on single families. I don't think they would.
Yeah.
I think they're like, here's a single family home, we'll buy it, pay cash, and then rent it.
And then rent it out.
I don't think there could be other institutional investors that come through with that business model. Like I said, the young guys that I was talking to, the entrepreneurs, they've got a great idea. I don't know if they're going to be able to execute.
Successful or not.
But if they could execute, could they get a couple of very wealthy people behind them?
Yeah.
To say, we'll throw $50 million at this,
right?
And you guys go do this. Yeah, it's a possibility.
Yeah, I mean so in my opinion, this could change the landscape of certain neighborhoods. So as properties come up for sale, are these institutional investors gonna buy these properties, or investors, just regular investors, and then either tear them down and build 2, 3, 4 unit properties on there right in the middle of these, conforming neighborhoods that are just single family, detached houses with, 1 story, 2 story, whatever it is, but it'll change the look, the feel of the house, and it will change the look and feel of just the neighborhood because of the density of kind of just the population going up in that neighborhood as well. So anything else you have to add to this, Danny?
I think the only thing, someone in the county part of the area, like, so we have county parts of Thousand Oaks and City.
Yeah.
Someone might be able to get away with this in the county, and they're gonna have to own their house free and clear. So
right.
That's the only way I think that this is gonna happen.
Yeah.
So, yeah, but I think we covered it all.
Awesome.
Yeah.
Well, this is Mike Wise with Danny Chan again here, and just wanted to thank you for watching. If you want to watch more videos on some of the things that we talk about, just visit the YouTube channel Mortgage Wise, and you can see more videos there. Thanks a lot for watching, and we'll see you next time.
Take care, guys.